G'day and welcome to this week's video. This week we're going to have a quick discussion around mortgage stress, and it's a well-known fact. It's been documented in the last probably 3 or 4 months that around 1 in 4 households are in some type of mortgage stress. And mortgage stress is essentially where the household's really not making enough income to service their outgoings of the residents. But some of the stuff we've seen in recent times, we've had obviously the ABC do a lot of work on mortgage stress, and they've brought out an extremely good heat map for people to have a look at their postcode to see how an area is travelling or a state, so you can look over the whole of Australia just to see where the points of stress are at the moment at current interest rates. And just as importantly, you can then increase the interest rates to see what difference 0.5% or 1% would make to that particular sector. So if we go and have a look at Victoria, so we can see here this is at current interest rates, and you can see along the bottom, and I'll just there we go, that might just make it a little bit stronger so you can see, a bit too much. So you can see along the bottom here that the heat map is at current interest rates, and then we can start to increase the interest rates all the way up to 5%. Now, for those that are sitting on term deposits and have cash at the bank and are not getting much interest rates, we know we're at historically low official rate has been set by the Reserve Bank of Australia. But as I've said in the past, a lot of these interest rates that borrowers are paying is not always going to be determined by the official bank. There are a lot of money that is being borrowed by the banks from overseas sources. So as interest rates start to climb overseas, it's going to have an effect on the interest rates that our borrowers are paying here. And I've seen that in recent times where one of our superannuation fund clients for a property within their fund, they had some borrowings, it jumped by 0.85% to 6.15% within 1 day. So significant changes, increases can happen regardless and out of step with the official rate. But looking back to the heat map, you can see here obviously the darker the colour, the more stress that the postcode is in, and obviously you can click, there's Kyneton, so they're saying that there is 14, if I go back there again, 1,463 mortgage households there, and at this point in time 56% of those mortgage households are in some sort of mortgage stress. And as you can see, we can now drag up, what if it goes up by 0.5%, then it goes to 57, or 1%, which is closer to what we saw with our client. They got an increase from the bank of 0.8%. So you can see that the very small changes for people that are already just teetering to make ends meet, and this is where, as everyone would know, we're quite negative on retail, that less is going to be spent on in the retail sector, particularly for Myer or David Jones or stuff you don't particularly need. You'll still be spending money at Coles and Woolies and Aldi because they're essential staples. They're things we need. But everyone's going to be pushing hard to make sure that they make their home loan repayments. So we'll put a link to this. It's a very, very well done. There's a lot of information above this map. It's right at the bottom. But we'll put a link in the description, the comments down below. But you can see that it can potentially, and if we go straight into Melbourne there, Bland, with 1% increase, over half of mortgage residents there will be in some type of stress. Trentham, 100% of the 326 move into some type of mortgage stress. Point Cook, so it's been one of the growth corridors, 17,000 mortgage households, and 41% with just 1% interest rate rise. So have a look at the map. Go through the whole page. It's quite extensive, but a lot of extremely interesting information there. And enjoy. Give us a thumbs up if you like the video. It's a bit of a negative topic, but I think it's good information. It's good to be aware, particularly for those that are thinking about residential investment properties. If people are struggling, if investors are struggling, they may be in a forced sell position, which will affect supply and demand. So need to be wary about that. And if you can, subscribe to the channel. That'd be awesome. We'll catch you soon. Bye.